Hi! It's been a long time since we last spoke, and today we're going to dive into topics that affect us all: interest rate. The last time when we spoke about interest rate was sometimes in 2022, when the interest rate was really rising at a very high and ultimately reached a very high at about 4.21% for the 3-month SIBOR in 2023. Okay, however, the landscape has been changing, and in September, the Federal Reserve has actually reduced the interest rate by 0.5%. Interesting, we observe that Singapore fixed interest rate has been reducing even before way that. They actually start reducing since early 2023. And this we had actually pointed out since since last year actually. So while the Federal Reserve maintained a high rate, Singapore interest rate has been going down, especially for the fixed interest rate. So those who have seized the opportunity to purchase your unit during this time, congratulations! You would have secured your property at a much lower rate than today. Before we dive deeper, let's take a look at the current lowest interest rate that is available in Singapore for the home loans. Okay, for the SORA packages, the HDB now currently lowest is at 3.82%, while for the private property is 3.68%, and for the building under constructions for the private property is 3.75%. And if you are looking at fixed rate, okay, the HDBs and the private resales now stand at the lowest now at 2.6%. So with the recent reductions of the rates from Feds, how will it affect the real estate market in Singapore? Okay, lower interest rate generally makes borrowing more affordable. That means it will increase the demands for property as potential buyers take advantage of a lower mortgage rate. With more buyers entering the market, we may see pressure on the property prices in Singapore. Additionally, the investor might shift their focus back into real estate as they view the real estate has more attractive investment compared to other asset classes that could be adversely affected by lower yields. Okay, this renewed interest can further boost the transaction volume in the Singapore property market. As mentioned earlier, local banks in Singapore has been reducing the interest rate, especially the fixed home interest rate, since early 2023. So they likely anticipated these reductions from the Feds much earlier. So suggesting that the local interest rate for home loan, especially the fixed rate, may not drop significantly. Still, other factors may impact the local property market. For instance, Singapore Treasury bill, which is very attractive during the last 2 years, has reached as high as 4.4%. It was hovering around 4% for the past 2 years. Okay, but now, recently, it has edged slightly below 3%, and current, which I just checked, is 2.71%. Okay, the fixed deposit rate current now offered by the banks is at 3.75%. And while the Singapore annual inflation as of July 2024 is at 2.4%. So this raises an important question. Where do you want to put your money, and not to only beat the inflations, but also to grow it comfortably for a nice retirement? Singapore property might be just the answer. According to CEC data, Singapore property year-on-year growth has been growing average at 4.9%, while this data has been updated quarterly since March 1976. And many Singaporeans, as well as foreigners, especially those who are still applying for Singapore permanent residency to benefit from the lower ABSD when they purchase their first property in Singapore, view Singapore property as a reliable and safe investment. With the Fed latest move, we will expect those buyers who has been sitting on the sideline to make their move, impacting the demand in the Singapore property market. As mentioned earlier, Singapore local bank has adjusted their fixed home rate since early 2023. So we might not see a significant drop of reduction in the interest rate. However, Singapore property market is still remaining very attractive to the investors. What do you think the demand and the transactions will look like in the coming months? The recent launch of novel grants may offer a glimpse of what's to come, with about 83% of the unit sold on the first day. So, how will this impact the property markets if we anticipate more buyers and transactions? Well, higher transactions volume indicates a strong demand, which can lead to increased property price, typically seen in a seller's market, where the buyers are competing for limited supplies. But we must consider the lag effect. Changes in transaction volume does not immediately impact any price adjustment because market participants, which is down here, we refer to developer, may need time to calibrate their expectations. So, is this a window of opportunity for you? Over the last few years, developer has been very cautious while bidding for lands, be it land sales and en bloc sales. Especially en bloc sales, it has actually stagnated. We hardly hear or see any land en bloc sales for the past few years. So, what do you think the supply and the demand of the property markets will be like in the next coming month? I'd like to hear your thoughts. If you have any questions or you want more details on any part of this video, feel free to reach out to me. I'll leave my contacts down below in the description. Thank you for watching.